Hey guys, Joe here from JCS-Charting. It's Sunday the 17th of November. We have a quick update on the DAX and the US markets. And this is our Discord here. It's a daily thread of the DAX course index, which is a real index without dividends compared to the performance index. And that was the latest update on the 13th of November. I said the third time testing the green support, which is basically that line here. You see it even better here on the course index because the performance index has different highs here. It kept making new all-time highs here, where the course index kept making a triple top right here, and it was breaking through new all-time highs very late this year in October. And then I mentioned there's a quick spike allowed in the best case on tomorrow. That was Wednesday. So I was actually assuming a temporary subcycle low on Thursday. That didn't happen. We got already the low on Wednesday, which was quite early. That means our shorter term cycles, they shifted, and that low might have set the new start of the last cycle, which could run all the way up for new all-time highs into the end of November. While looking at this chart here, we switch quickly into the live chart. And here we got the live chart with the last two candles of the previous week. We had that strong candle on Thursday, and on Friday we consolidated a little bit. But still, if DAX wants to play that big descending broadening wedge here shown on the black dashed line, the first target is around 7% higher from the latest levels we had on Friday evening. And that meant, and I kept saying, if that green support zone, if that remains here, and if the bulls remain bullish here or keep buying, there could be even a move up to 10%. Let's switch back into the Discord. Here's a smart money of the DAX, and what you see here is actually another warning sign that smart money actually broke the lows of August 5th, which means big guys keep leaving the ship, and DAX is still just a few percent away from its all-time high. So that entire rally here, or that sideways consolidation, was just used to leave or to decrease the size of greater options and so on. What I expect, what is possible to happen, that we have another rally here to all-time highs, and then there's a big chance that a large divergence to smart money is building up. So smart money will come up here as well, but not even close to these highs. And DAX just probably just pops up above new highs. And then I really wonder what is going to happen. A last look at the H4 thread, the cash chart. We were assuming that low somewhere here on Thursday, and that didn't happen. It happened quite early. The cycle shifted here, which is shown here on the red face, and also the entire time length decreased a little bit. So that new pattern here is active now, started on Wednesday, and of course there will be a new low expected in the middle of next week. And we're switching into the US markets. What you see here is the so-called Dow theory. You compare the Dow Jones Industrials at the top with the transportations at the bottom. I mentioned already a few weeks, actually, no, that was the week before last week, that large divergence actually broke, which kept the markets on the bearish side here with that whole divergence. But the transportations and the industrials kept making new all-time highs, so that large divergence here shown in purple is broken. That means on the long run we are actually in a bullish cycle. We had here that latest divergence, which is shown here in blue, which was bullish. That worked out nicely. The transportations failed in making a new low. The industrials did, and then we rallied. Both indexes rallied to new all-time high. So both made a new all-time high at the same time, and they both came down now. So I consider that little sell-off on Friday just as a consolidation, and that we run higher with time. And with this is a Discord, the weekly thread of the Dow Jones. Here I mentioned that major resistance we shorted here once in that red zone, that pulled back only, and then we rallied up. We were buying actually these dips before the US election, and I mentioned that this major resistance is going to break, and most likely we see 44,500, which is our last target of that green sequence. And as you can see, 44,500 got hit on the dot, and the Dow reversed quite sharply on Thursday into Friday evening. But I also mentioned that large RSI divergence here, which keeps building up, and that doesn't mean that this is the end here of the rally of the Dow Jones. We are looking for intermarket bearish divergences between the three major US markets in the upcoming weeks. And I want you to focus on that RSI divergence. We have the same at the S&P 500. And if we keep hitting that trend line, that falling trend line with new all-time highs, the danger or the caution actually persists at all three major indexes. And we do a little throwback of the S&P 500, the H4 thread here. A few months back we were talking about that descending broadening wedge. I can't even tell you when we were looking at that, sometime in August. And at some time I came up with these higher targets of that pattern here, and we were looking for that back test somewhere around that trend line. We were buying that, by the way, and then that projection actually worked out nicely. And we kept grinding higher, and then there was that new descending broadening wedge. I also showed that to my members on the H1. Here we got the first touch, second, third at the upper touch, up the upper trend line. Here at the fourth hit, and then here it got triggered. And then we got these new targets at 59.92 all the way up to 62.8 for the 100% move of that descending broadening wedge. And as you can see, it's right in the middle of these targets of that bigger pattern. And here's a zoom in. And on Friday, on Thursday already, we were entering, or that was Wednesday already, we were entering that target zone here, and we were hitting the first target of the big DBW, and then on Thursday we were hitting 60.28 on the dot, and we reversed sharply. That's how accurate our targets are. Just to give you an idea what you can expect at JCS-Charting. And we switch into the live chart, the cash chart of the daily. As you can see, the S&P is running in a very clean time band, and the next cycle low is actually due by Wednesday, but the time frame started already Friday. We had a few astro turning dates already. Started this weekend, starting actually on Friday with a full moon and so on. And that divergence here also kept building up with the new all-time high we had at the beginning of last week. The pullback was hitting the 50% retracement at 58.56 quite nicely. I was buying that on Friday evening. And let's see how that turns out. That corresponds to the all-time high of October, which is right here. So that might be a retest, and we probably run higher again if this is already an early cycle low. And this also matches the VIX, because the VIX wants still a low into the end of November, and that corresponds most of the time with a high at the index, at the S&P 500. And here's what I mean about the VIX. I zoomed in here a little bit, so because the whole zoom out is for members only. You have 2 cycles in here, one which is roughly a month and one which is a quarterly cycle. And the quarterly low, which has, you have to give it a bit more tolerance to both sides, plus minus a week. But the daily cycle, which wants a low at the end of November, is still on. So this low we got right here at the 13th doesn't really match the time band of the VIX. And the VIX is usually telling us the truth compared to the index most of the time. Not always, but we also broke that trend line here, by the way, which started in July. So I assume that we still see lower VIX levels before there's another pop-up like that or that in the near future. And last but not least, the Nasdaq 100. You see here a daily cash chart with that bearish wave wedge here shown in red. The target line still runs at 19,900 roughly, but that Trump rally or that election rally retraced almost, or actually a little bit more than the 61.8 retracement, which matched the moving average of 33 days here as well. And I expect at least a little relief bounce. And as I said, we have to watch all of these 3 major indexes the next couple of weeks. If we see all-time highs at 1 or 2 and one of them is not following. We had all-time highs at the same time here on the 11th last week, and this is usually a bullish sign, and that they all turn around at the same time, that is not that often. So we are also close here to that cycle low around the 19th or 20th, and midpoint is on the 20th, which is on Wednesday, but we can be on the early side here as well. Yeah, that's about it. If you liked this update, leave me a like or a nice comment. And for my members, I won't be available tomorrow morning. I will be online in the afternoon. And I see you then at the Discord. Have a nice remaining Sunday evening, and I wish you all the best for the start of next week. Thanks for watching.